guilty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay, won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne. So you wanna be my enemy? You should've known I'd never kiss the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane, it's your mistake. Kingdoms rise and fall, I've come to take it all. I'll take it, I've come to take it. Kingdoms rise and fall, I've come to take it all. I'll take it all. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes. I take shots to the form of art. I'm never gonna look back, cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change, slowly take a step today. I will never be the same, cause that's what it takes.
There we go. Happy Tuesday, guys. Tuesday, right? February 25th. Welcome. It is earnings day for AMC. Good Lord, what a brutal day for the markets in general today. Can y'all hear me okay? Doc Zeno, what's up? Anya, Yolo, Ono, Blue Sky, Ethan Casmer, howdy, Carl. Not gonna stop, what's up? Hawaii Agent 50, love the name. Jeff, howdy, howdy. Alan, good afternoon. Will Adam Aaron be eating again on the call? I don't know. I've got the press release page up here. Let's see. I don't see any big price action going on, so I'm guessing they released the results yet. 329 AMC down 2% today. Let's look at some other stocks. GameStop down 2%. IMAX was up about 0.5% today. What did Bitcoin end up at? Ooh, 87.8, down 4.4%. Ah, brutal. Joe Woodward, thank you for the sub. Parabolic says, breaking news, AMC increases stake in Hycroft. Boy, oh boy, that would get some people upset. IteBet says SMCI puts for 67 cents last Friday, sold for $3 today. Booyah. My soundboard is working. See. It's been so long since we've done a live stream. I used to have all these buttons memorized. Oh, here we go. That's good job. Good job. AMC Baggy says, I've been conditioned to expect a drop after earnings call. Maybe this time will be different. I think it's going to largely be dependent on how earnings and revenue come in versus expectations. And then what the Australian guy says, right, Dan? Good day, mate. We need a yeehaw. Where is the freaking yeehaw? Better memorize these buttons again. I need to start doing these daily live streams. Here we go. Yeah! There you go. If you are just tuning in, the call is going to be in 50 minutes. That is 50. So we are just waiting around for the press release. I'll pull it up on the screen here and we can celebrate or commiserate, depending on what the results are, while we wait to hear from Adam and Sean. Carl says he bought some this morning. Hang on one second. I got to go grab something. All right. Oh, man. I saw on GameStop News today that Ryan Cohen responded to that letter from, who was it? Some company that was urging him to buy Bitcoin. He said, letter received. You guys think he already bought Bitcoin? Do you think he's just contemplating? I hope he did not already buy it. Like now, wait for the dip, Ryan. Now might be a good time to think about it. Palantir, 61.8 retracement today. Augustine says, thank me later. Yeah, a lot of these stocks have been getting creamed, huh? Let's see, we got Carvana. That one had been overpriced. While we're waiting on. Down from what? 292 to 221. That was one I've been watching. Palantir was another one that's just been getting obliterated. 125 down 87. Hims has been getting inked. The other one we're going to look at is Michael Saylor, $73 down to $39 on him. And then MSTR, ouch, 543 down to 2. Almost, they peeled off more than 50%. Holy smoke. Well, hopefully you guys follow the general guidance of always be taking profits, especially after big run-ups. Roadrunner says, I think Ryan Cohen is just having fun. I think so too, probably. But do you think that is misleading to investors? Oh, look, he's now following Bitcoin on Twitter. Let's rush in and buy. I'd rather buy because the price got pulled back, not because he followed somebody on Twitter. But that's just me. What do I know? I mean, there's people that were telling you to buy GameStop at $32, $33 just a few weeks ago. What the heck do I know telling you to be patient? It's overpriced. It's going to come down. And then you buy it. Ethan Casmer says, next time AMC is over $10, I buy a house with it. Right after the reverse split, it might be bucks. Ethan, hang in there. YOLO Ono says, a lot is getting wrecked. As a positive, it is a buyer's market. It is a good time being cashed. I saw Adam Aaron posted what would you call it last night? An angry tweet, a cryptic tweet. You just wait. Be sure and read our press release today. There's a lot of misinformation going on out there. I wonder, what could he have been talking about? I reviewed last night my video from January 2nd, where I did some predictions on this Q4 earnings and cash burn. I didn't see a lot of other people willing to go to the mat this quarter for whatever reason. All the usual suspects that publish prediction videos. Where are they? Where were they? How come I got to take all the bullets and the arrows? Such is my lot in life. Diatog, what's up? He says, when is a good buy? When is a good buy? W-E-N. All right, we will check it out. I have not seen that, Michael. He says, has anyone seen people posting the economic blackout happening February 28th? I have not. See, trying up here. Do we got a press? We got a press release. All right. Let me switch screens here. Let's pull it up. Wow, look, run up. All right, total revenues 1.306. We had estimated around 1.3. That is beautiful. Net loss was 135 million. That would include the impairment of long-lived assets. Adjusted EBITDA was 164 million compared to 47 million last Q4. Net cash provided by used for in operating activities, 203 million provided by operating activities compared to a loss of 77 million operating activities last year. Free cash flow was positive. Wow. 113 million compared to negative 149 million last Q4 2023. Let me bring this price down. It's running up off our. And cash equivalents was at 632 million. That would include, I presume, the dilution that they announced in December. All right. Diluted loss per share, the quarter 35 cents. Should pull up and see what I had estimated. So far, just my initial reaction looking at these numbers, like better than probably, at least not as bad as people were expecting, which is good. I had so loss 135. I had net loss between 139. 139 was what I showed on the video. Wow. 139, and it came in at 135. I was off by $4 million. Pretty close. Not too shabby. Big Bag says, I always tweet something before earnings. Did he tweet anything yet? Negative. Timmy says, "What did you just say? We will." I'm just teasing. I have no idea if there. It's a joke. It's a joke. What happens next for this year, I cannot solidly predict, but what I'm watching is box office, cash burn, and then whatever they say today, hopefully, about CapEx, the Go plan. I really want to hear something today, some updated guidance, more clarity on CapEx. Has Elon sent Adam Aaron his 5 accomplishments yet? I don't know. I think they've been trading emails back and forth, Dan. Is Adam Aaron going to dilute on this huge run-up? Not going to stop it. I don't think that they dilute based on price. They dilute based on expected cash burn and cash on hand. Remember, they're forecasting. The CFO's job is to forecast out cash burn 2 years. They do those forecasts, and so they look at expected box office. They look at their expenses. They model the cash burn. Same thing I do. I have net income and cash burn modeled out through the end of 2026. I'm just a dummy here on YouTube. If I can do it, imagine what the CFO can do, having the actual numbers. They know when they're going to be short on cash. Trust me. That's when they do a dilution. That's why in November, when it was trading at $4, I told my Discord there will be a dilution in December because the cash burn between Q4 and Q1 had nothing to do with the price running up in December. So if you can, I want to train, teach, encourage you guys to start thinking in terms of cash burn drives dilution. Then you can make your decisions on timing better. Like, we've stepped out of the play before the last 3 dilutions, waited for the price to come back down and jump back in. It really is not that difficult to predict. All the people only looking at the chart, oh, I don't understand why he's diluting because of the price. CFOs don't work that way. The price going up helps them, but that's not what's driving the. Once you guys can like step back from the emotions and just learn to think like a CFO, all this stuff becomes very, very predictable. And it is hilarious to me, the chart readers. It just caught me by surprise. Yeah, because you're only looking at the chart. You never open up the books. You never look at the financials. Of course it catches you by surprise. I got tired of that. I wasn't looking at the books in 2021 either. But things changed. Things changed in 2020. We had to start looking at as they were out of shares and started running out of cash. We had to change our strategy. I know that makes people hate me that you don't just look at short interest anymore, darn you, Tony. You look at those pesky financials too. Hashtag evolve, guys. Grow up. UK Dave, do you think he will expand on the Ford agreement with Goldman Sachs? I'd love to hear more. I could only figure out so much about that. So, number one, most of us aren't familiar with them. Number two, we didn't have a lot of the details. We only had a smidge of detail. We knew AMC would get a prepayment. We knew that the deal could last the contract up to 6 months. Beyond that, I'd like to hear more, sure. At some point, hopefully when its contract's done, Maybe we'll find out today. Maybe we can understand more exactly what happened. Interstellar Ape, what's up? Yeah, been a while, yeah. You must be sleeping in on the evening live stream. But yeah, it's good to be here during the day. I've been waiting all day for this. Kitty Cowboy, howdy, howdy. New Mocha Joe says full year revenue declines slightly, still not profitable. We saw with Cinemark and IMAX that their full year revenue declined slightly, so not unexpected to me that it declined. And the good thing is I was $6 million off on total revenue. I had said 1.3 billion. Came in at 13.6 for the quarter. So I had 13.24. Came in at 13.6. Net profit I had at negative 139. Negative 1. Pretty close. The call, 34 minutes. Price sitting at 346. Sufyan, what's up? He says EBITDA is the most important thing. I mean, if you want to take out things like depreciation and amortization, that Sufyan right here, our adjusted EBITDA, 164. That's right. It was over 120, over 110 million more than the same quarter a year ago. But revenue was up 300 million. If we look at EBITDA from 2024 to 2023, it was down. But revenue, not going to try and micro super in detail. I'll do after we listen to the call and read through the whole 10K, and maybe later tonight, maybe tomorrow, put out a 10-minute summary video. So right now, we're just taking it at first glance. We'll listen to what they have to say. I'm not going to make too many proclamations. I mostly want to hear what they have to say, and then I'll form my thoughts after that, if that sounds fair to you guys. I don't want to put the cart before the horse. Speaking of horses, season 2 of 19. You're a fan of Yellowstone in 1903. Swabilia says some good movies coming out this year. I firmly believe this is the start of the recovery. I am, especially looking forward to Q4. We got some exciting potential in Q2 and Q3. Right now, I'm saying Q2 and Q3 going to be close. Too hard for me to call. But saying there's a chance. There is a chance. But I'm not making any predictions right now. I've already seen people saying, oh, yeah, definitely every quarter from here is profitable. I'm not going on that record yet because I hate being wrong. And I think they're going to be close, but there is a chance. Q4 is almost a deadlock profit. Probably a big one. Aaron says your mic keeps cutting out. If I'm too close. Lane Man, yeah, not going to stop. We love Lane. And you know what? We just realized this weekend that we missed last 5 episodes of Yellowstone. Started watching those. The 2024, November. I somehow forgot about those. We started watching those. Interstellar Ape says, I love financials. It's definitely one of the factual info we have. Also, only other fact is the past price and volume action. Yeah, we do have that, right? And I do look at the charts, too. And I look at the moving averages, I look at the RSI, but when the company is not cash flow positive and they have risk of dilution, for me, that becomes more of an overriding layer. That's the top layer. The chart is the next layer. And if you're not looking at the financials, if you're only looking at the chart, you're swinging it in the wind. You're just totally at the whims of the company. They decide they're short on cash, you're going to get blown out no matter what the chart looks like. Owning the float, what's up, amigo? What's our next bet? I don't know. What would you propose? Do you have any strong thoughts on Ryan Cohen, Bitcoin? I expect a kitty tweet, Ethan says. I hope so. I do own a little GameStop now, by the way. Yeah, UK Dave said, I'd like to hear if there's any concerts like Taylor Swift. I'm sure we all would. They hired a VP of whatever her title is, special events. Come on. Where's the deliverables here? I want to see something. But Interstellar Ape, getting back to the layers of how we do the price prediction for AMC. If it were a regular company, it's like on autopilot. We pretty much are sure the company's growing and profitable. We worry less about the top layer and more about the chart. But I would humbly suggest for AMC, you got to always have your top layer of the financials and the cash burn top of mind, more important than the chart. Unless you're just playing the chart for a daily trade, then it doesn't matter. I don't play AMC if I'm buying AMC, I'm trying to get the absolute lowest price based on the financials and then the chart, and then hold it into better times. But I keep on having to get out because of freaking dilution. Like losing money. So there are a couple things that I want to hear about today before I get back in. I've been out since still going to movies, still A-list member. There's a couple risk things that I'm watching. I need, for my own comfort, to hear answers on those, and then I can get back in. Someone said on Twitter, I saw, Tony's pushing bankruptcy. Just because I make a video letting you guys know there's a lawsuit, I mean I'm pushing bankruptcy. If you were in my Discord, you would know we've talked about it many times. We consider it a very minor risk. But the risk exists, right? We can't ignore it. We can't just say it's not there. It exists. If it were to happen, it would be a devastating impact if the lawsuit went against AMC. I have no way of predicting what I think that the lenders are sane. I think AMC is sane. And I think that the judge is sane. And all people with any normal brain want a settlement out of that lawsuit. So I'm just going to guess that it will be a settlement. I can't tell you that with 100% certainty. Even on the Allegheny thing, I only said I'm 99% sure. Now, I'm not a contract law expert on debt. How the heck am I going to give you a percentage of certainty on this lawsuit? I can't. But that's not one of the reasons I'm not in AMC right now. If I get back in, I want to hear what they're going to do about being out of shares and what they're going to do about CapEx. And I need to see how Q1 box office ends up so I can judge the cash burn. Those are the three things I'm really looking at. If I get answers to those to my satisfaction, I'll get back into play. And I'm not going to really be concerned about the lawsuit other than knowing it's there and managing my position size for that risk. That's not something for me that would keep me out of the play, but it is a risk that exists. The lawsuit is, when they did that debt restructuring in June to push the maturities out, and they restructured the company and put all the collateral under Movie Co. Well, some of the primary, the first lien holders did not like that they lost their collateral. And so they're suing the company, saying you can't just redo a contract like that. You had a deal with us that we were first in priority for collateral. I mean, they kind of have a point, but at the same time, if they win, it would be devastating for everybody, including themselves, because not going to help them for the company to go bankrupt. So I think if sanity prevails, the best solution for everybody is work out a compromise. That's what I think is going to happen. I just can't say that because I can't give you any percentage. I can't give you any odds. I'm not a contract law expert. Sparky is in the chat. He's a bond portfolio manager, not related to meme stocks. But I think he agrees. Like, there's no sane party that would drive for AMC to lose, including the plaintiffs. Does not make sense. Lando, yeah. We think that they want to pay out. Exactly. They want to pay out. They want some of their collateral back. They want some sort of make us whole, make us feel better. That's what we think. Matt says AMC going to need to dilute one more time this year to make it. Let's see what we have here. They say the cash on the balance sheet. 632. My guess right now is that 200 million will be burned in Q1. My Discord already knows this. We've been talking about it for 2. So we're thinking, 450 million cash by the end of Q1. Yeah, I'd say that increases the risk of AMC being tempted to want more cash. I can't tell you with 100% certainty that they would go do that, though, because how good is Q2 and Q3 going to be? They're going to be close. Maybe they decide to squeak by. My observation of them is they like the safe layup. They don't like just squeaking by because it's very risky. So, Matt, I sort of agree with you, but I can't say for sure what. Depends on how they decide to roll the dice. But yeah, I think the cash is going to be severely depleted. Just looking at my spreadsheet, looking at my cash burn model, I don't even think we're going to finish Q1 with, for the industry, over 1.6 billion. It's going to be big, probably a big cash. Not trying to be negative. I'm just trying to be honest. After that, looking pretty good. We got to get through Q1. Fidget Spinner, what's up? He says, Adam Aaron hates the price down at these levels. How can they dilute or fund losses or CapEx without a reverse? Don't disagree with you. It would be, let's not get ahead of ourselves. Speak out of turn. Let's see what he says today or what announcements come out. Someone asked me in the, we call it part 2. Part 1 was the dilution in December. We are expecting a part 2. Whatever that means. My feeling is, just my gut, part 2 will be between today and the annual. What is part 2? Gotta wait and see what they say. Some of y'all have your own ideas. Part 2 could just be roll the dice. Part 2 could be ask for more shares. Part 2 could be issue some preferred. Part 2 could be a reverse split. Many ways it could. I don't know. Oh yeah, Arthur, good. Let's check that interest expense. $112. No, I thought in my spreadsheet, told y'all it was not going to go. Balls. One-time expenses. Interest expense is pretty easy to calculate. You have a couple degrees in finance. I only have one, not even in finance. I had corporate borrowings at 109. That was just copied from. I think I said on my video it'll be a little bit higher this quarter, last quarter, because in Q3 we didn't have a full 3 months with the new deal. So 112, not surprising. Right in line with expectation. Now I got 2 data points to prove I'm right, and I feel really good about my modeling out the rest of this year. And I do think that if the box office grows, company gets free cash flow positive, if we only think positive thoughts and everything just goes better from Q2 on, that by 2027, right, just forget about every negative thing you're thinking. If everything goes perfect, by 2027, the company gets a credit rating upgrade. Then they can restructure this debt again, push the maturities out to 2032 at a better interest rate. And we won't have 112 million. But we're probably going to be dealing with that quarterly expense for year and a half would be. It's unfortunate, but the more important priority to them was not having all the debt due in 2026. Pushing that maturity 2030, 2029, critical. So they did the right thing. I think we were all expecting that we'd get a better interest rate, but the way it worked out, no. Swabilia says, I hope they announce AMC buying Cineworld. I don't know personally how I feel about that. I know there are a lot of people excited about the prospect and a lot of people mortified at the prospect, but I think if that were to happen, depends on how that deal is structured. Where the heck would we get the money? Got no shares, we got no cash. How do you do that? How do you make that happen? Lando says, I think if you turn the gain up on your mic, it will pick up your whole sentence. All right. I probably have some, I mean, I'm in the yellow. Let me move the mic closer. Is this better? Junior says, is there any way to find out if they have leases that are almost over? Yes. In the 10K, and I think the 10Qs, they only give us one data point. The average years remaining on the leases, and it is 8 years. That's the only data that I have seen. That's higher than I'd want it to be. But we do know, because I track every quarter, they tell us how many theaters they closed, how many they opened. They've closed over 100. They've closed more than 10% since I've been tracking it, and they will continue to close them. If in your area you have a crappy little AMC that's never clean and never getting any upgrades, I would pretty much wager it's on the closure list, and they're just counting down the quarters until that lease is done, and they're not going to invest any money in it. There are going to be more closures. But what do we say? If it's 8 years, that means half of them are more than 8 years to go and half are under. What percentage is 1 year left, 2 years left? I don't. All right, we got 13 minutes. 13 minutes. King Louis, what's up? He says, where did the merger talks originate? Cineworld, we think, dropped a news article, kind of trial balloon, to start letting people know that they wanted to IPO. And that it wasn't an official announcement, right? It was a third-party announcement. Cinemark is reportedly in talks to IPO, and they're going to explore a merger with Cinemark and AMC. Nobody's freaking commented on it officially. A little trial balloon. So yeah, it gives us one more thing to talk about, but nothing official. Maybe nothing come of it at all. Canada Cedar says, do you see MOAS ever happening? I'm the wrong person to ask on that, Canada. My general rule on this channel always has been, if the short interest official reported is not over 20%, I do not consider the ticker a short squeeze candidate, much less a MOAS candidate. That makes people really mad because they want me to tell you that the data is fake. They being everyone in the AMC community. Oh, you can't look at that 8% number. That data is fake. All right. If that's the narrative you want, there are 1,000 other people to go listen to. I'm just telling you what I use for my trading decisions. Always what I've ever only reported on this channel is official short interest. And it's beautiful when it's over 20%, but when it's not over 20%, you're not going to hear me talk about short squeeze ever on any ticker, ever. I'm not penalizing AMC. It's just always been the rule. Could run-ups happen? Yeah, run-ups happen a lot of times on thinly float stocks, small float stocks. AMC's not even small float, so I don't know what to tell you. I'm just trading it like a regular stock. Would I like to be holding a position when lightning hits? Yes, but not something I'm going to be talking about on this channel. based on the current data. Would I like something to happen for everybody? Absolutely. Am I going to say it's never going to happen? I'm not a negative person. I'm not going to tell you something is never going to happen. I'm just not going to. I got to have the data to back up what I'm talking about. You know what I mean? Is that fair? Lando says we do not want a buyout on Cineworld. We can't even run our own company. That's what I'm thinking, Lando. Like, how are we going to take on another 700 theaters when we can't even pay for the ones that we have? I mean, things will be better in a year from now. But we also, I mean, how can I comment about Regal? Because I can't even look at their financials. I mean, it was so bad they went bankrupt. And yeah, they got some of the debt discharged. Not all of it. And like May was saying on Sunday night, maybe the lenders aren't putting so much money into CapEx to keep the properties maintained. I mean, who knows what barrel of worms, can of worms that we got there. So I don't know. I'm not really going to comment much on Regal other than saying we'll see when we find out. I think we all agreed on the Sunday live stream. The best scenario would just be let all of them go away. Regal, go bye-bye. Cineworld, go bye-bye. Just close them all. Let Cinemark and AMC scrap it out. Yeah, sure. What's up? He says, whatever happened to choke on that neat growth? Never been a big fan of decoding tweets. You guys been around for a while. You've heard me say that. You've heard me yell at people for decoding tweets. I've always been of the general, my general guidance is go by what's on filings, first of all, because those are audited by auditors, the CPA firm, and they're equal to the SEC. What a CEO says or tweets, you gotta be very careful on your interpretation. Choke on that. Pro, I think what he's trying to communicate is this company is not going to go bankrupt. I think if any of us read more into it than that, that was probably us allowing ourselves to create our own internal meaning, which might not have been true, might not have been correct. You got to be very careful on these generality. Choke on that. What does that mean? It means whatever you want it to mean. I just always took it like no bankruptcy risk, but we keep on ending back up in this bucket of back in the bankruptcy risk wagon again. We're out of shares, we're out of cash. We're back in that damn same spot that we were in into 2022. I mean, literally right now, we're out of shares. They're not out of cash, but they will. By the end of Q1, we're going to be in the same freaking spot we were in August of 2022. Very little cash and no shares. What do you think is going to happen? Thank goodness box office is going to be better than 2023. Magnetic Resonance, what's up? He says there was free cash flow this quarter with negative operating loss. Can you go over basic accounting and explain the difference? That would be probably, I will in my video, but typically if it's positive free cash flow but negative net income, it's going to be because of non-cash expenses on the income statement like depreciation or amortization. And we had, as for an example, 78 million of depreciation and 72 million of impairment of long-lived assets. This is actually good. I had budgeted 100 million for that. So you can see last year, it was 106. So they had to write off less. This is not a goodwill impairment. Just you got whatever assets. I'm not a CPA, but air conditioners, Coke machines, projectors. You write them down as they wear out. In every Q4, we see this impairment chart. But it's not a cash expense. It's just an account. So that's how you can have positive free cash flow. Hopefully that is sufficient for an explanation. Canada Cedar says, if AMC has no available shares, how do 3 million get shorted? All right, so just to clarify while we're waiting the next 4 minutes, when I say no available shares, I'm talking about no additional shares to issue into the market to increase the flow and raise money. There's always shares available to trade. You have your free float, which is what? 380 million. Some portion of those is always turning over. That's called share turnover. Should be even probably a metric if you pull it up. Yeah, see, turnover. There's not a number on it, but see that turnover. I mean, you could have a stock with 10 million shares that trades 100 million shares in a day because they had a 10x turnover. That's day traders, high speed trading. See all these goofballs. SEC, explain to me how a stock with 10 million shares traded 100 million. Tell me you don't know what share turnover is. You know how many professional day traders I've ever seen complain about that metric? No. Who complains about it? Project Popcorn people that don't understand how high-speed trading works. Number of day traders that complain about it? 0. Because they're the ones making it happen. I've watched them do it. Watch them trade tens or hundreds of thousands of shares in a few seconds, over and over and over. Now multiply that out times millions of people doing the same thing. There's always shares to trade, even if it's a fraction of the shares outstanding. And if you want to know more about that, go ask Grok about share turnover. Stop listening to goofballs. They're always surprised about everything. We got 2 minutes to go. 2 minutes to go, ladies and gentlemen. King Louis, yep. In fact, in my screener, my day trading screener or my pre-market screener, I'm looking for shares with high turnover. One of my filter items. Am I looking for it because it's crime and I want to report it to the SEC? No, I'm looking at it because I know a lot of people are trading that fucking stock, and it's liquid and not going to get stuck with a bad fill. Lima says, Tony, what about all the shorted shares since 20? I mean, the short interest is what, 8-9%. Shorts get closed and opened every day. So other people are going to tell you that shorts never closed. If that's what you want to hear, don't hang out here. I can only tell you that we've been doing very well trading AMC using market data. Almost everybody in my Discord has repaired their position using market data, not listening to all this other stuff. If that other stuff is working for you, then go listen to those people. But if you're wondering why it never seems to go your way, maybe start considering #evolve your thinking. We just use market data, same as any professional institution. All right, let's see if we got webcast audio. Oh, still got music. Any moment now, though. Switch to this. Right. I think, just my opinion, it's going to be an unpopular one. You're counting on billions of naked shorts. You're probably some bad decision. Like I said, since end of 2022 now, we've just been treating this like stock, doing just.
You may be placed into question
here we
queue
go.
at any time by pressing star 1 on your telephone keypad. As a reminder, this conference is being recorded. It's now my pleasure to turn the
I'm going to put my mic on mute so we can listen in, unless I got a yeehaw to exclaim or something.
Thank you, Kevin. Good afternoon. I'd like to welcome everyone to AMC's fourth quarter and full year 2024 earnings webcast. With me this afternoon is Adam Aron, our Chairman and CEO, and Sean Goodman, our Chief Financial Officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements. The company undertakes no obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures such as adjusted EBITDA, constant currency, and free cash flow, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, everybody, and thank you for joining us today. What a superb quarter AMC just completed, especially so in November and December of 2024, thanks to hit movies like Gladiator 2, Wicked, and Moana 2, which pushed Thanksgiving patronage at AMC across the United States to the highest AMC has ever seen in our 105-year history. And Mufasa the Lion King, along with numerous other titles, gave us results in December that were just stellar as well. AMC revenue in the fourth quarter was up 18% year over year, and our adjusted EBITDA of $164.8 million was more than triple. May I say that again? Our adjusted EBITDA was more than triple the adjusted EBITDA that was reported for the fourth quarter a year ago. We handily beat consensus estimates for both revenue and for adjusted EBITDA in the fourth quarter of 2024. Importantly, AMC generated more than $200 million of cash from operating activities and $114 million in free cash flow in the fourth quarter. It was our highest quarterly cash flow post-pandemic. These results underscore the continued progress that AMC has been making as we continue on a road to recovery, buttressed by a growing lineup of consumer-appealing movies opening exclusively in movie theaters. More than 62 million guests visited an AMC theater worldwide, AMC here in the United States, Odeon in Europe, and our operations in the Middle East, in the fourth quarter of 2024, marking a post-pandemic fourth quarter record for us and an impressive 20% increase in attendance compared to the fourth quarter of 2023. Complementing this fourth quarter attendance milestone, moviegoers enthusiastically embraced the variety and quality of our food and beverage offerings, driving food and beverage revenue per patron to $7.15, an all-time fourth quarter record for AMC ever. All those quarter-over-quarter improvements are especially noteworthy given AMC's incredibly high market share and the resulting strong financial performance that AMC enjoyed in last year's fourth quarter, specifically due to our distributing Taylor Swift's The Eras Tour movie and Beyonce's Renaissance film in October, November, and December of 2023 to great acclaim. Looking at the full year of 2024, AMC welcomed some 224 million moviegoers to our theaters across the globe. And those moviegoers gravitated toward our premium experiences, to our largest screens, our best projection technologies, our most immersive sound systems, and our luxurious seating. Accordingly, we are pleased to report to you that for full year 2024, AMC achieved all-time per patron result records on several key metrics: an all-time record for admissions revenue per patron, an all-time record for food and beverage revenue per patron, and an all-time record for total revenue per patron. Another crucial accomplishment during 2024 was AMC's continued successful strengthening of our balance sheet. Sean will provide more details in just a few minutes, but suffice it to say that our balance sheet is meaningfully stronger today as a result of the significant actions that AMC took during the year to reduce our debt, to lengthen our debt maturities, and to bolster our cash reserves. 2024 was truly a year of two halves. The first half was heavily impacted by Hollywood's long strikes of 2023, followed by a resurgent second half driven by an increase in new releases and an overall stronger film slate. The domestic industry box office, which is kind of the basic measure of the size of our industry, which was only $3.6 billion for the first 6 months of 2024, soared to $5.1 billion in the second 6 months of 2024. Much, much stronger than the first half by orders of magnitude. The second half turnaround was certainly eventful, with a number of long-standing box office records being shattered. Notably, in the second half, the movie industry saw the highest grossing animated film in history. It saw the most successful R-rated film of all time. It saw the highest grossing musical film adaptation of a Broadway musical of all time. And as I said earlier, we at AMC enjoyed the biggest Thanksgiving weekend box office ever. Looking at all the progress made in the latter half of 2024, it seems to us that it's clear that our industry finally is getting healthier. We're still not where we want to be. We're still not where we need to ultimately be. But real progress has been and is being made. And looking to 2025, the current year that started less than 60 days ago, at AMC we are highly optimistic that the box office for this new current year will feel much more in line with that of the robust revenues of the second half of 2024 as compared to the anemic revenues of the first half of 2024. Early projections indicate that the number of wide-release films in 2025 could increase by approximately 17% compared to the number of wide-release films in 2024, representing yet another significant step toward ultimately getting to pre-pandemic output levels and another cause for our optimism that the box office will materially rise in 2025. During this current new year, we anticipate the box office will strengthen with each successive quarter. Historically, Q1 has been the quietest period of the year, and this year is likely to be no exception to that long-standing trend, driven by seasonal consumer behavior and studio release patterns. But following Q1, we believe the box office is set to heat up, with Q2 poised to significantly outpace the first 3 months of this year. As we transition into the heart of the big summer movie season, Q3 looks to be a vibrant summer for moviegoing and, importantly to us, for AMC. And then we hope to close out 2025 big, with a wave of highly anticipated franchise sequels, including the second part of Universal's highly successful Wicked, Disney's Zootopia 2, and what can you say about this film, the next installment of James Cameron's mind-bogglingly successful epic saga, Avatar. With the potential for each quarter in 2025 to build upon the last, we currently estimate that 2025 domestic industry box office could see a $500 million to $1 billion growth compared to 2024. And remember that given AMC's historic market share levels, about 2/9 of any heightened box office should flow straight in the direction of AMC Entertainment. With that as a preamble, and I'm going to come back a little bit more to talk about some initiatives now underway at the company and some thoughts on our recent performance in the markets, let me turn the call over to our Chief Financial Officer, Sean Goodman. Sean?
Thanks, Adam. Thanks, everyone, for joining us this afternoon. Indeed, the fourth quarter once again did prove that moviegoing demand is robust when compelling content is available on the big screens. During the quarter, we welcomed 62.4 million guests to our theaters around the world. This is a post-pandemic fourth quarter record that exceeded the prior year by some 20%. And not only did we achieve an attendance record, we also achieved all-time fourth quarter record beverage revenue per patron of $7.15 and our second highest fourth quarter admissions revenue per patron of $11.56. As a result of this, we registered fourth quarter post-pandemic records for both total admissions and total food and beverage revenue, and our overall revenue grew 18.3% compared to the fourth quarter of 2023 to hit a post-pandemic fourth quarter record of $1.3 billion. Our results show that the continued focus on enhancing the guest experience, growing profit per patron, and overall operating efficiency are indeed yielding results. Our revenue per patron is now approximately 34% higher than it was in pre-pandemic 2019. This is driven primarily by growth in food and beverage revenue per patron of 51%. The success in food and beverage revenue per patron is a result of our market-leading initiatives, including collectible movie-themed merchandise, specialty cocktails, menu enhancements, and mobile ordering technology. When comparing our results to the fourth quarter of 2023, it's important to note that comparisons may not really provide the full picture. This is because you may recall that in the fourth quarter of 2023, AMC distributed the highly successful concert movies Taylor Swift, The Eras Tour, and Renaissance, a film by Beyoncé. These concert movies had special event ticket pricing and generated higher than usual food and beverage revenue per patron associated with high demand collectible concession items. So, while the fourth quarter admissions revenue per patron declined by approximately 2.4% compared to Q4 2023, when we normalize for the impact of the concert movies, admissions revenue per patron actually increased by 3.2%. Likewise, food and beverage revenue per patron appears to be only slightly ahead of the fourth quarter of 2023. However, when we normalize for the impact of the concert movies, food and beverage revenue per patron saw an increase of approximately 2.8%. And while we are discussing the impact of last year's concert movie events, we should note that AMC recorded domestic market shares in excess of 35% for these two movies in 2023, and this makes market share comparisons somewhat difficult. Now, when you couple our fourth quarter 2024 revenue records with our focus on efficiently delivering the best possible guest experience, adjusted EBITDA increases from $47.9 million in the fourth quarter of 2023 to $164.8 million this year. That's an increase of more than 240%. And these results were achieved in both the domestic business, where adjusted EBITDA more than tripled to $123 million, and the international business, where adjusted EBITDA increased more than fourfold to $41.8 million. These results are a clear indication of the operating leverage inherent in our business. Revenue increased by 18.3%. This led to an adjusted EBITDA increase of 244%. This operating leverage is another reason to be optimistic about AMC's future as our industry continues along a recovery trajectory. Okay, let's now move to a discussion about cash flow and the balance sheet. A highlight of this quarter is cash flow. We generated $203.6 million of cash from operating activities and $113.9 million in free cash flow. These are our very best cash flow numbers since the fourth quarter of 2019. And we ended the quarter with cash and cash equivalents of $632.3 million. It is worth noting that historically we generate cash from working capital during the second and fourth quarters, and we tend to use cash from working capital during the first and third quarters. This pattern will of course depend on the timing of film releases and the pattern of audience attendance during holiday periods. But during the fourth quarter, we benefited from strong cash generated from working capital that we expect will largely reverse in the first quarter of 2025, when many payments related to the successful fourth quarter are made. Talking about cash flow, CapEx net of landlord contributions was $83.9 million in the fourth quarter, and this brings the total net CapEx spend to $213.7 million for the full year 2024. We expect CapEx in 2025 to be in the range of $175 to $225 million. From a theater footprint perspective, during the fourth quarter, we added another one new high-performing theater, and we permanently closed 3 underperforming locations. So this brings the total number of locations permanently closed since the pandemic began to 192, and the total new locations opened to 62. So this represents a net reduction of 130 locations, or approximately 13% of our locations at December 31, 2019. And we continue to see that the 62 new locations very significantly outperform the 192 closed locations. Going forward, as we review and rationalize the theater portfolio at every opportunity, we'll continue to invest in our circuit to enhance the guest experience. Note that the deferred rent balance at the end of 2024 was approximately $37.6 million, and we plan to reduce this balance by another approximately $8 million during 2025. From a capital markets perspective, we were once again active during Q4, continuing to strengthen our balance sheet to position the company for sustainable long-term success. During the course of 2024, we have reduced the principal balance of our debt and finance leases by $375.9 million. We have extended the maturity of approximately $2.4 billion of debt that was due in 2026 to 2029 and beyond. We've raised approximately $262 million of gross proceeds from the sale of our Class A common stock. And in addition, last month, January, we received $171.7 million as initial cash proceeds associated with the establishment of forward positions for 30 million shares of our common stock, plus at-the-market offerings of 17.1 million shares. Strengthening the balance sheet is a priority, and since the beginning of 2022, we have lowered the principal value of our debt and finance leases by more than $1 billion, and we've also repaid $277.5 million of deferred leases. This brings the total debt that we've reduced over the period to $1.34 billion. These actions have been made possible by our ability to raise equity capital, which has been essential to our survival and has undeniably strengthened our balance sheet and positioned the company to capitalize on future growth opportunities as the film exhibition industry recovers. The outlook for the industry box office in 2025 and 2026 appears to be increasingly promising, and we are confident that the strategic and operational actions that we have taken and will continue to take position us very well for the future. And now I'll hand the webcast back over to Adam.
Thank you, Sean. On our last quarter's call, we introduced the notion that after 4 grueling post-pandemic years, it was finally time for AMC to get off our heels defensively and instead to play on offense once again. So on this call, I want to give you an update of the activity already underway for AMC to go on offense. Specifically, AMC's GO plan, G-O, go on offense, set in motion a series of initiatives designed to leverage our strengths and accelerate our recovery. Aligning with our expectations for a rising and more consistent box office over the next several years to come, it makes sense to try to grow your revenues when revenues are in fact growing. With a central theme of improving the guest experience inside our theaters, the AMC GO plan is multidimensional and designed to drive additional profitable attendance to our theaters, to AMC in the U.S. and Odeon abroad. With our industry-leading per-patron metrics, which, as you know, hit record levels in 2024, what's so important about this drive to increase and bolster our attendance is that every incremental guest in our theaters is not only valued, but it drives a huge percentage of their incremental revenue down to the EBITDA line. As more capital becomes available to AMC to invest in growth initiatives, one key aspect of the AMC GO plan is to add more premium experiences. Capitalizing on the fact that AMC today is already, without question, the global leader in offering premium large format screens. I can say to you today that in calendar year 2025, and again in calendar year 2026, we currently expect to upgrade more of our IMAX auditoriums to the very popular IMAX with Laser. We intend to add more Dolby Cinema screens. We intend to add more Prime at AMC screens, our so-called house brand PLF format. We also intend to bring our successful XL or extra large screen concept that was launched in Europe last year to the United States. We would hope to introduce between 50 and 100 XL screens in the United States this year and add another 150 XL screens in addition in 2026. Our rollout of laser at AMC screens with their brighter and sharper picture on the screen resulting from laser projection continues apace. It has already been installed in about 1/3 of our U.S. screens, and we will be adding a great number more of laser projections to AMC theaters, both in 25 and in 2026. Another part of the AMC Go plan is to improve the seating comfort and appeal at more of our theaters, especially ones that are already quite profitable and well attended. Recent luxurious seat replacements at AMC Burbank 16 in Los Angeles, along with AMC Lincoln Square 13 and AMC Empire 25 in Manhattan, have led to dramatically improved guest satisfaction scores and, importantly for us, high theater gross seats. In fact, just a couple of weeks ago, on a Saturday night, out of the 550th theaters in the entire United States under the AMC brand, our three highest grossing theaters were Burbank, Lincoln Square, and Empire, the very three theaters where we installed this new luxurious leathery seat that's wider, there's more padding, that rocks, and in many cases has more legroom. Knowing that this has been a successful initiative to date, we've already identified several handfuls of important theaters that are profitable and well attended, that should produce even higher financial returns for AMC if we can introduce this new seat type in those locations. We aim to deploy here, again, as soon as growth capital becomes available to us such that we can invest to upgrade these theaters. Additionally, with respect to AMC's Go plan, it also includes our focusing on several exciting new innovations in our loyalty, subscription, and other marketing programs. To that end, on January 1, just several weeks ago, AMC launched our fourth and newest AMC Stubs loyalty program tier called Premier Go. It offers heightened program benefits, it's free, and this loyalty tier is designed specifically to incentivize our current AMC Stubs Insider tier members, who also enjoy free memberships, to patronize AMC more, to buy more movie tickets in our theaters and buy more food and beverage at our theaters. Premier Go status is earned when a consumer sees at least 8 movies at AMC in a year or earns at least 5,000 AMC Stubs points in a calendar year. We started on January 1st, 2025, with more than 300,000 moviegoers already enrolled in the Premier Go tier as members because we based their membership on their purchase history with AMC last year in 2024. We have also announced that we will be enhancing other benefits for our AMC Stubs members, especially those in our A-List program. In this case, we intend to give more value to our most avid moviegoers who average somewhere between 24 and 32 visits per year at AMC theaters in the United States. How are we improving A-List? First, we have increased the weekly movie limit for A-List members. They can now watch up to 4 movies per week, up from the current 3 when the new A-List innovations take effect on May 7th. Second, to encourage more family moviegoing, we will be lowering the minimum age to sign up for A-List from the current 16 to 13. Why did we pick 16 previously? Because to prevent fraud, we needed a state-issued ID. which takes us to the third improvement to A-List. To make A-List membership verification easier and faster at our theaters, A-Listers, beginning May 7, will be able to upload their own photos to their AMC Stubs profile and use this in-app photo of themselves, the members, in lieu of having to show a state-issued ID. That's true with children as well as adults, so we can lower the age to 13, and we think more parents are going to cause more of their children to sign up in the program. In addition, on A-List, we have already announced that in May, we will launch a wholly new AMC A-List Classic program, a subscription program that provides for the watching of one movie a week, not 4 movies a week or 3, but one movie a week, and not good at all of our theaters, only at our AMC Classic theaters. But in doing so with these limitations, we have the opportunity to offer this AMC Classic tier at a significantly reduced monthly subscription price. A-List continues to be one of the most successful programs that AMC has ever introduced, and we think it will get better still with these changes coming soon. We have much more in store for our movie-going guests in the guise of more marketing programs designed to stimulate attendance, but we're not ready to announce them yet today, so look for more important marketing initiative announcements coming from AMC to be publicly announced in the coming months. For all the talk about pursuing growth initiatives, because in so doing we can drive increased financial returns and boost the value of the company for the benefit of our shareholders, I think it's imperative that I add that it is also of paramount importance to AMC, and nothing has changed, that continuing to focus on strengthening the balance sheet, to reduce our debt, to lengthen maturities, to keep our cash reserves robust, remains an extremely important objective for this company. The fact that we strengthened our balance sheet over the past several years is why we are still here, and we will not take our eye off the ball. At the same time, we also believe there's enormous opportunity to grow our EBITDA, to improve our financial returns, to benefit our shareholders if and as when we have access to more growth capital. That pretty much concludes the comments about the fourth quarter and some of the activity underway at the company. But before I close this call and move to questions, I'd like to close with just a special message to our retail shareholders, many of whom, thousands of whom, will be listening to this webcast. I want you to know that what I've said to you for years now remains true. Every day I continue to actively read your social media commentary, as it gives me a great sense of your views and lets me read the room, so to speak. Sadly, there's so much false information floating around AMC on social media. Similarly, there are crackpot conspiracy theorists, like one after another, that seem to delight in speaking foolishly about AMC. So, from the horse's mouth, here's some straight talk. Please know that I am acutely aware of AMC's share price decline over the past 3 years, and I am acutely aware of the pain that is caused for many of you. I am, after all, myself, I believe, the largest single individual AMC shareholder. I've been increasing my share position since 2021. And I am, after all, or was it January 22? Was it? What was my last sale? I forgot. January 21? January 22. It's 3 years ago, right? Yeah, 3 years ago. I haven't sold a share in 3 years. Instead, I've increased my share position. And therefore, a share price decline that hurts you hurts me too. My interests are completely and directly aligned with yours. They are not aligned with anyone else other than you, and that is exactly as it should be. So think about all that I'm seeing, what you write and say. Here are two key thoughts. First, do not allow yourself to be distracted. Our biggest problem is not various market practices that some of you seem to detest. Instead, quite simply, it's that the movie industry and the movie theater industry has been in crisis for more than 4 long years. Domestic industry-wide movie theater attendance, believe it or not, is still down almost 40% from full year 2019 levels. That is a fact. And the fact that attendance is down means our ticket revenues will be stressed. The fact that attendance is down means that we will be able to sell food and drink and merchandise to fewer people. That is the problem at AMC. But I tell you that not as a bearer of bad news, but as a harbinger of good news to come. Because fortunately, as we have implemented one new idea after another, and as we have made our company more efficient over the past several years, AMC's profit per patron numbers are way, way up. We often see our profit per patron being as much as 50% higher than it was in pre-pandemic levels. So what that means is that for success, AMC does need the box office to be higher than it was in 2024, but we really do not need it to climb all the way back up to 2019 levels. And even more fortunately than that, the box office finally looks to be growing significantly and materially again. We are absolutely convinced, based on our expertise and our knowledge of what's coming, that the box office, industry-wide box office in 2025 will be bigger than 2024, and that the box office in 2026 will be bigger than that of 2025. But of course, no one has a perfect crystal ball. That's our view, that's our belief as of today. Only time will tell. The second thought I wanted to share is that some of you rail about the dilution of our stock, or with the perfect hindsight that comes from being able to Monday morning quarterback, the timing of the sale of our stock. Please know that we have only raised capital if the company truly and absolutely needed that cash to be in the drawer. Remember that many of our competitors, both big ones and small ones, both the most important ones and the most unimportant ones, so many movie theater chains have been forced into bankruptcy in the last 4 years because they ran out of cash. Not AMC. I repeat, not AMC. We stayed strong. We stayed alive. We stayed healthy. We stayed on a path towards recovery because of the actions that we took to bring cash in the door. Having said that, though, here is a pledge that I am making to you today. There will be no more cash raised from the sale of common stock in calendar year 2025 unless we first take that matter of authorizing more common shares to you, our shareholders, for
He almost
you to
got
vote
me.
and help
He
us
almost
make
got me.
such a decision.
Unless
In summary,
we already know you got to
the
bring it to
entire
us.
team at AMC is
We
absolutely
already know
committed
that, Adam.
to do all that we
You
can
almost got me.
to
Buddy.
grow our revenues and to grow our adjusted EBITDA. We are constantly striving to enhance the value of our business, which after all is your company. AMC is the acknowledged leader of this industry. We have kept AMC alive and relatively strong in very troubled times, and we will continue to do everything humanly possible to keep AMC moving forward. And to that end, we just delivered one hell of a fourth quarter of 2024. Sean, let's move to questions both from our securities analysts and from our retail shareholders.
Thank you. We'll now be conducting a question and answer session. If you'd like to be placed into question queue, please press star one on your telephone keypad. One moment, please, while we poll for questions. It's star one to be placed into question queue. Our first question is coming from Chad Boynan from Macquarie. Your line is now live.
For Chad, thanks for taking our question. So on the AMC Go plan, if the number of wide release films and the box office growth materializes as you expect, is that when CapEx will rise to the $375 million or so annual level implied by the high end of the CapEx range? Or, is there anything else you can share in terms of further visibility for the magnitude or cadence of the CapEx deployment? Thank you.
I'm happy to respond, Chad. Our CapEx budget is going to stay around $200 million, plus or minus a little change, until such time as we have access to growth capital. And how we have access to growth capital is something that we are sorting through right now. There are a number of really creative ideas in place inside the company where we might be able to get third parties to finance some of our growth. There are other opportunities that are so obvious. The returns on some of these growth initiatives is so high that we'd love to be able to convince people to trust us with more growth capital. But until we have access to growth capital, we're going to keep CapEx tightly constrained. The time will come when we can grow it, but you'll know it way in advance. We will flag it in advance. We're not going to surprise you with big CapEx expenditures without having told you prior to doing so.
Understood. Appreciate that. As a quick follow-up, IMAX recently announced a deal for the movie Narnia to have an exclusive theatrical run, and I think this is a film that otherwise would have gone direct to streaming. So just curious to hear your thoughts and your views on the potential for more deals like this to come through and how you see the dynamic between streaming and theaters evolving from here. Thanks.
So there are streamers and then there are streamers. There are some streamers who have actively embraced theatrical releases. Apple and Amazon come to mind. And we've had superb meetings and conversations with both Apple and Amazon. We're highly encouraged, for example, that Amazon, which is a combination of Amazon and the old MGM, announced just a week or two ago that they were staffing up and boosting their distribution personnel with significant numbers because they would like to dramatically increase the number of films that Amazon is releasing. Doubling, even potentially tripling. We're not quite tripling, but more than doubling the potential releases coming out of the Amazon sphere. Similarly, Apple is so excited about the movie F1, which is coming out in June, which they're hopeful and we're hopeful is going to be a major blockbuster, gangbuster hit. It's directed by Joe Kosinski, the director of Top Gun Maverick. I believe it stars Brad Pitt. Apple is behind it completely. Being distributed in the U.S. by Warner Brothers is behind it completely. AMC is behind it completely. So the notion that some of these streaming services might actually embrace theatrical releases is something that's quite exciting to us. I think that as the industry experimented with all sorts of different release patterns post-COVID, a general consensus has emerged in Hollywood, not by all, but by most, that the most successful movies on streaming platforms are those that go to theaters first. And those movies that have a great theatrical release often wind up being the most watched movies on streaming services. Not all. You notice that there is another major streaming service that I talked about, that I did not talk about yet, that is not as enthusiastically embracing theaters, that being Netflix. But we continue to reach out to Netflix. And right now, Narnia is scheduled to play on AMC's IMAX screens. We would love to be able to convince Netflix that they're embracing theatrical releases is good for them. They did it with Glass Onion. They are doing it with Narnia. We'll see where this goes. Narnia is still 2 years away. But having said all that, I have always believed that the world of the consumer's appetite for entertainment and amusement is so voracious that it can support both a robust theatrical industry and a robust streaming industry side by side.
That's perfect. Thanks, Adam, and congrats on a great quarter.
Thank you. I'll turn the call over to management for retail investor questions at this time.
Thank you. So the first question that we have is about our merchandise and movie-themed collectible items and how that is going, and if we can give the investors an update on that.
Thank you, Sean. One of the things I said in my prepared remarks was that AMC has been implementing one new idea after another. And not all ideas work, but a lot of them have. And one of them that clearly has worked and worked unbelievably well is movie-themed merchandise. 3 years ago, and it's working, by the way, not only in the United States, but also in Europe. 3 years ago, we didn't sell any movie-themed merchandise in our theaters. None. In calendar year 2024, we sold about $65 million of movie-themed merchandise from nothing 3 years earlier. And the profit margin on this movie-themed merchandise, not exactly, but it's in the neighborhood of 50%. These are good margins, as they were great margins if you were in Shark Tank. These are really good margins, and we're selling a lot of merchandise. And one of my goals for 2025 is to see what we can't do to significantly increase our merchandise sales for the fourth year in a row. And it should actually be easier to accomplish than it may sound, because number one, we've been increasing the number of movies that we do this movie-themed merchandise for. It started out that we were only doing a handful of these a year, and now seemingly every couple of weeks we have a new movie-themed product coming out. But people didn't want to get stuck with excess inventory. So, especially in the early phase of this merchandise ordering, you got to buy the merchandise from where it's manufactured like 9 months before the movie comes out. So we would place orders for merchandise and then have to get it to hundreds and hundreds of retail locations around the country. And there was no ability to increase the supply of fast-selling items. Whatever you ordered 9 months before, once it sold out, you were sold out. We were finding ourselves in 2024 often selling out on Friday or Saturday of opening weekend of everything that we'd ordered for a movie. And when I say everything, I don't mean small quantities. I mean quantities in the hundreds of thousands of items. And so one of the things that we've decided to do for 25 is to increase the quantity of the merchandise that we order in advance so that we have more supply in our theaters, so that we don't sell out on Friday or Saturday, that maybe we have supply through Sunday, or maybe we have supply through the second weekend. But I do believe that our ability to continue to drive our merchandise business is one where we ought to be able to succeed handily.
And talking about
before I go on this one, and your question was about movie-themed merchandising, but talking about movie themes, we also have movie-themed drinks now in our bars. And just like we have more, and we used to have a few a year, but just like we have more and more movie-themed merchandise in our theaters, we now have more and more movie-themed drinks. And often they're our most successful item at the bar. And so we're also looking at ways, including new beverage pouring technologies, where we can increase the number of movie-themed drinks that we have available because people clearly are buying them. And remember how important food and beverage numbers are to us. Our food and beverage numbers for the fourth quarter were the highest they've ever been in AMC's 105-year history. So this notion of being creative and imaginative and innovative in what we sell to our guests at our theaters is of crucial importance because it drives increased profitability.
And talking about food and ancillary revenue, there's a question about popcorn. And our retail popcorn initiative.
So I've got to say, I'm so proud of what we've done in taking what's called AMC Perfectly Popcorn into the home. This started only not even 2 years ago, 22 months ago, I believe, when we launched AMC Perfectly Popcorn at 2,600, I think, close to it, plus or minus 100 Walmart locations in the United States for our ready-to-eat popcorn, and about 500 Walmart locations for our microwavable popcorn. Believe it or not, as a movie theater company, we have chefs, both for our dine-in theaters and even for our concession stands. And our chefs worked extremely hard and almost for a year developing the recipe for the home popcorn line so that it would taste like theatrical popcorn that you get in our theaters if you made it yourself at home or ate it yourself at home. And they succeeded. Fast forward 24 months. In calendar year 2024, our popcorn sales doubled compared to 2023. What's more, the distribution of our store counts greatly increased. In 2024, we added Kroger and Publix and Meijer. For 2025, we've added what's called Associated Grocers, which wholesales food products to regional and local markets and smaller chains around the country. As a result of all that, our home popcorn line, which launched in, round numbers, 2,500 stores just 2 years ago, by the end of next month, will be in 11,000 retail stores in the United States. And I'm especially pleased. Walmart is such an important player in the grocery space. And I'm just so pleased that Walmart informed us a couple of months back that they were going to more than quintuple the number of Walmart stores carrying our microwavable popcorn line. So I think we went from 500 Walmart stores carrying the microwavable line to 2,700 by the end of April. This is all quite encouraging. It's very hard to launch a consumer product in the United States and do so profitably. And I believe where we are now is cumulatively, our Perfectly Popcorn line cumulatively is profitable and currently profitable. And we are highly confident that it will continue to grow in sales as we go forward. We've already established we're one of the best sellers in the popcorn category. And by the way, we just launched a new flavor, cinnamon butter, for those of you who like it slightly sweet. Anyway, I think popcorn's been a smashing success and more to come.
Question about our studio partners and windows. Do you see any opportunities to negotiate longer windows for our theatrical movie releases, and how might that impact the business?
I sure hope that we can introduce longer windows, because I think that the current industry experiment on Windows has failed. Just a little history for those of you who don't know. Prior to COVID, in the United States, it varies by country outside the United States, but in the United States, movies typically did not get to the home until 74 days after initial theatrical release. The industry then COVID came and everybody experimented with all sorts of everything. Movies were going to the home the same day they were being taken to theaters. They were being taken at all sorts of different dates. Big movies, maybe a little slower, but not so big movies going to the home faster. The end result of all of that, and it's not all because of Windows, but if you look at our industry's attendance across the entirety of the industry, it's still 40% below pre-pandemic levels, not quite 40%. The last number I saw was 38%. It's still almost 40% below pre-pandemic levels. That has stressed the EBITDA generation of theaters, that has stressed the profitability of theaters, that has stressed the share prices of theaters, and it's a problem for theaters. Now, I said Windows was not the only problem. There were other issues, including that Hollywood was releasing fewer titles. That appears to be changing. Hollywood is releasing more titles. But as the industry experimented with a whole bunch of variety of options, what the industry coalesced around was that the old 74-day window would become a 45-day window. So that movies would go to the home about 6 or 7 weeks after they hit theaters, not 10 or 11 weeks after they hit theaters. And some movies have gone to the home even quicker, 30 days and 17 days. In our view, 17 days and 30 days are too short. And we would like to convince all the major studios that they should keep movies in theaters longer. And this is a conversation that is front and center live. I was in the office of the CEO of one of the major 5 studios just 2 weeks ago, and he told me how important it was to reestablish the 45-day window as being sacrosanct. I was with the president of distribution of another major studio, one of the very largest, one of the most important, who was bragging to me that whereas other studios were keeping their movies in theaters only 45 days before going to the home, that studio was taking their big movies to the home only 60 days after the movies were released theatrically. So these conversations are live right now between theater chains and studios. We believe that theater chains would generate more money if windows were longer, but we also believe that studios would generate more money if windows were longer. Why? Because they would gross more in theaters, and the more successful the run in theaters, the more successful a run they're going to have when they finally take movies to the home. So watch this space. We'll continue to see what we can do to convince the industry that it should be firm around this 45-day number. And once we get there, maybe we can extend it to 60 days or 74 days like it was pre-pandemic. We will all learn together, but this is a very live industry debate topic right now.
Thanks, Adam. And I think we've got time just for one more question here, which is very related to what you were just talking about. When you think about the box office, how are you thinking about when the industry might reach more of a steady state level and return closer to pre-pandemic type of levels? So,
take you all back in time. Prior to the pandemic, for 5 years in a row, the industry box office was between $11 and $12 billion. This is the so-called domestic industry box office. This is all theaters, all movie theater companies, all chains, all locations in the United States and Canada, the basic measure of our industry. For 5 years in a row, it's been $11 and $12 billion. For 11 years in a row, it's between $10 and $12 billion. COVID comes, it's $2 billion. That was 2020. Then in 2021, it was $4.5 billion. Then in 2022, it was $7.5 billion. Then in 2023, if you exclude the Taylor Swift and Beyonce movies, which we sort of created out of thin air at the last second, which were not expected, did not come from a studio and were not expected to be movies in theaters. The industry box office was like 8.7 or 8.8 billion in 2023, and it was 8.75 billion in 2024. So the box office was flat. It had been high for a decade, went to next to nothing with COVID. It started rising again. It flattened out in 23 and 24. Why did it flatten out in 24? Because of 5 months of actors and writers strikes that crippled production of movies and decreased the number of film releases in the first 5 months of 2024. But that's the past. Let's look at the future. I said in my prepared remarks, we think the number of wide release films is going to increase in 25 over 2024. We have studiously looked at this movie theater slate of the titles that are coming up. And it's one blockbuster film after another blockbuster film, after another blockbuster film, after another blockbuster film. We really do believe, and as I said, nobody's crystal ball is perfect, but we really do believe that the box office will be, in 2025, will be somewhere between $500 million and $1 billion more in 2025 than it was in 24. And we looked at the movie slate in 2026, and it also was wonderful. So we think that the box office in 2026 is going to be bigger again than it was in 2025. So honestly, I hope that the movie theater industry box office does not peak and go to a, quote, steady state. What I'm seeing is that the industry box office is actually growing and growing significantly. It's going to grow big in 25 over 24, we hope. It's only February. We'll all find out by the end of the year. But we're pretty sure that the box office will be a lot bigger in 25 than it is in 24, a lot bigger in 26 and 25. I would hope that it's bigger in 27 than it is still in 26. Success breeds success. The more movie-going there is, the more profitable movies are. The more profitable movies are, the more that studios will want to make more movies. The more movies that studios make, the bigger the box office becomes. So there you go. That's the circular loop on the road to recovery.
And I think that's all the questions we have time for today.
So everybody, thank you very much. We had a very good quarter. The year, 2024, was very good if you only look at the second 6 months of the year. But the second 6 months of the year looks to us to be a harbinger of what's coming in 25 and again in 2026. So I have one simple request. I don't know what you're doing this weekend, but why don't you go to a movie theater and go catch a movie? And when you do, we'd be happy to welcome you at AMC. Or if you're in Europe, Odeon. Or if you're in the Middle East, AMC Cinemas. Thank you, everybody, for listening. Thank you for joining us today.
Thank you. That does conclude today's teleconference and webcast. You may disconnect your line at this time and have a wonderful.
Well. He ignored my question about the 566. I'm not going to forgive you, Adam Aaron and Sean Goodman. Now what? We got another 3 months to a year for social media to argue about it. Those loans, those convertibles are due when? 2029, 20. There's going to be people, guys, telling y'all for the next 4 years that those convertibles are going to convert at 566. They're not. Not going to convert at 560. How do I know that? I don't know. Talk to any bond trader. Look at Cinemark, whose convertibles are trading at $10 to $15 over their conversion price. Look at virtually any ticker that has convertibles in the money. They convert close to maturity, not just because you magically go over numbers. And Adam, I'm going to keep bugging you. Clear that up, because I think you accidentally misspoke. And I think we need an honest answer. We need clarity. I'm not trying to be bearish. I'm I don't think I'm smarter than AA. I just, like I said, talk to any bond trader, not in the meme stock movement. An unbiased one. You'll get your answer. You'll understand why I'm telling you this. Michael said we need to vote out the CEO. Unfortunately, guys, we don't get to vote on the CEO. He's appointed by the board. And you can't even kick the board out because only, 2 or 3 of them come up for a vote per year. And all the Popcorn Project people told you to vote last vote, whenever that was, last year. They said, don't approve, that vote where we could kick them all out in 1 year. Don't do that. Don't approve that. Now you can't even vote out the whole board. You can't even replace the whole board. You're still stuck with replacing only 2 or 3 of them. You're never going to get the majority of the board. So you're never going to get rid of the CEO because y'all voted against it. Popcorn Project people. Whatever's on the vote, say no. That was your one chance. That was your one chance to get rid of the CEO. Give yourself the ability to kick the whole board out at the same time. But they told you vote no. So now guess what, guys? You're stuck with the board and you're stuck with the CEO because you took Popcorn Project advice. Just saying. I don't care how anybody votes, but that was the result of what they told you. They told you to vote no. Now you can't kick the board out. Therefore, you can't kick the CEO out. Stuck. If you don't like it, I would never invest in a company that I hated the CEO. I just wouldn't. Anywho, what other questions y'all got? Biggest surprise for me in this is somehow we're free cash flow positive. I was expecting negative 100 million. So I will crawl through all the numbers with my team of CPAs, me, myself, and I. I'll bounce it off a couple people, but I'm going to crawl through the numbers and make sure there's not any one-time things in here. How did we flip 200 million free cash flow? The answer is in the financials. I guarantee you that. I will figure it out. When I have that figured out, I will make a quick summary video. I mean, mostly we met expectations. 18 cents adjusted diluted per share, 1.3 billion in revenue. I'm going to pull up my spreadsheet again here and show you guys what I had forecast. Make this a little bigger. Here was my revenue number was 1.324 billion. We came in at 1306. My unadjusted net loss was 38 cents. We came in at 35. So, I mean, they came in right at expectations, but still, I had net cash flow 100 to 150 million, and we came in positive. That's a big miss on my. This is something new that I added, the cash flow. It's really tough. It's tough to calculate cash flow. You can guesstimate, but things happen. So I'm refining my cash flow estimate model every quarter, and now I got another quarter worth of data. But that is the biggest surprise to me, and great. It's positive for AMC. Really, really good. I want to understand why, because now maybe I need to make some adjustments for my Q1 expectations. Maybe it won't be 200 million cash burn. But I can't say that. I make sure I fully understand how we had such a good free cash flow. Free advice says Tony had the cash right check current assets and liabilities. That will tell you. I'm going to dig through it. I'm going to go through the cash flow statement, balance sheet statement, all of them, till I absolutely can tell y'all, here's how they did it. Here's how they pulled it off. However they pulled it off, beautiful, but my inclination, yes, is that maybe it was one-time benefit, something. We'll see. We will see. For anybody, all the people complaining, the trolls in the chat, oh, the price went up. It went. Hey, Q1's gonna suck. I think everybody, the bulls and the bears in this chat, because this is not a hopium chat, we are all very aware that Q1 is going to suck balls. I don't even think the box office is going to be 1.6 billion. So you got to get through. You got to get through March. You got to get through the earnings from that. But then Q2, Q3, maybe positive, maybe not. It's going to be close. Q4, going to be really good, almost without a doubt in my mind, insanely profitable. And then, all these CEOs are saying 26 is going to be even better. So I'm going to trust all of them. It's not just AA. It's Rich Gelfond. It's Sean Gamble. That's all we can go on. I am not on this channel going to tell you Q2 and Q3 are going to be profitable. I don't know yet, but they have a chance. So I'm only worried about a couple things just to wrap this up. I was worried about CapEx. They kind of cleared that up. $225 million budget for 2025. That's same as last year. He said we would only spend more money on the Go plan if, unless, and until we have incremental cash. So I'm kind of okay with that. If you have a great quarter like Q4 and you want to invest an extra 100 million in upgrading some seats, all right, we might be able to live with that. I'm not. What I didn't want to hear was, what I didn't want to hear in this call was, we really need you guys to approve more shares because we really need to spend another 250 million this year on CapEx. They didn't say that. Could that be coming? I don't know. Maybe. That's your own thing to worry about. I'm going to worry about me. You worry about your stuff. I'm not going to tell you what to think. Current float is someone. $380, and they have 550 million authorized. And I think the 380 doesn't include the dilution because the December dilution, the contract not completed yet, forward contract. But suffice to say that with these shares they have reserved that they can't use because of the convertible notes, the executive compensation plan, they're out of shares. There is no way he can dilute that I'm aware of without, as he said, almost tricked me. He's going to have to ask us, he's going to have to ask shareholders with a vote if he wants more shares. There's no way for them to dilute that I'm aware of unless they issue preferred. They don't need our vote. It's a blank check. They can literally do whatever they want. But so that's something. That could be a way he end runs his little promise today. But if we take him at his word that he's not going to dilute common without coming to us, well, yeah, we knew that, Adam. You have to ask shareholders to either approve increasing the share count or doing a reverse split. That's the only way you get more common, and we have to vote on that. So, I mean, they still got tricks up their sleeve if they want. They could use preferred. Just sell preferred in the market or private placement. I'm not saying they're going to do that. I'm just saying I'm already mapping out all the things I got to worry about. Maybe those worries never come true, but I still map them out for myself. If you don't want to worry about that stuff, then that's your choice. I'm a worrier. I want to make money in this play. We've had a great run on AMC, making money on this since August of 2020. So I don't want to slip backwards. So those are, let's see, CapEx, that one's kind of off my worry list. Q1 cash burn is still on my worry list, but I need to look at these numbers. What else did I say was? Oh, just being out of shares. How are they going to resolve that? Do they have to run? They have to make a run for it and get more shares right away. But if I'm thinking like an executive who wants to manage risk of my company, I'd like to at least have the ability, knowing that I have those shares in my back pocket, even if I don't need to use them. That's kind of where I'm thinking. Like if I was Sean Goodman, I'd be saying, hey, Adam, some point this year, we need to have more shares, bro. Not saying, Adam, we got to use them, but what if another China virus comes over? Got nothing. We're hanging in the breeze. So I'm just thinking, like, they got a risk. It's up to them to decide. I don't know what they're going to. At some point, they're going to say, roll the dice or let's take the safe layup. We'll find out. Great advice. Thank you. I will. I'm going to go through it in detail. Tree says if share price increases and then they authorize shares at a higher price, that's bullish. Yeah, I mean, here, let's make sure we end this on the bullish part of your statement. If they are out of shares, they are. Don't have to worry about immediate dilution as the price runs up. You're not going to wake up one morning with an 8K that, oh, we just dropped another 50 million share prospectus. That's not going to see how it could. You might wake up one day to an 8K that says there's a vote in 60 days or 30 days, 10 days. But you're not going to wake up to a common stock prospectus. You don't have any. So maybe that does help. I mean, if they just sit on their hands and do nothing, and we get into a better Q3, Q4. I think the market's factoring in one for everybody now. Cinemark, IMAX is an outlier because China's on fire. IMAX is not really going to be. Cinemark, MCS, Marcus, and AMC might be a little bumpy as we finish up Q1, if it truly does suck as bad as we think. And then we get into better quarters. So that's the good news. Right? The good news is they're out of shares. my practical side says they will do something about that. But we'll see. Hawkeye, what's up? All right. Quick recap. Too long didn't watch. Revenue and earnings met expectations. Bullish. We thought it was going to be a miss. And they have positive free cash flow. So, and he says CapEx is going to remain steady compared to last year's. I mean, a lot of the stuff I was worried about for Q4 just got crossed off the list. Now I only got to worry about Q1 cash burn. And then after we get past that, I think we're more on easy street. Lawsuit, Phoenix. Yeah, so I talked about that at the beginning of this call. I did a video on the lawsuit, and here's my thoughts. Just because I did a video on it does not mean I'm trying to scare everybody that the Trumpers are so mad at me. I told you guys there's a lawsuit. Oh boy. Don't tell them to read the risk factors, Tony. We don't want them to know there's a lawsuit. There is a lawsuit, and it is a risk. What is the percentage of that risk happening? I don't think it's very high. I don't think it's very high. Other people think it's a certainty, but they want the company to fail. I'm just trying to be objective. I don't think that the risk is high, not because I'm a perma bull, just because it's a no-win situation for the lender or AMC. If AMC loses that lawsuit, everybody loses, including the lender that brought the lawsuit. They're going to what? Force bankruptcy and get, lose billions of dollars on their liens. Doesn't make sense. The only thing that I can see that makes sense with this lawsuit is they are pissed, and they probably have a right to be pissed that they lost their collateral, and they want some monetary compensation, and the only way to force it is a lawsuit. So that is my current thinking. The bond market also is not reacting to this lawsuit. So any of y'all out there in Twitter land are saying I'm pushing bankruptcy. No. But we're not going to put our head in the sand and say there's zero risk. Anything can happen in a court. If AMC were to lose, the outcome would be devastating for everybody, for us, for the company, for the lien holders. But because it would be devastating, including for the plaintiff, I don't think that is a likely outcome. I think they're using the lawsuit as leverage point. I'm not a lawyer, and I'm not a contract law expert. This is just my thoughts right now. As we get updates from the court, I will let y'all know. Next court check-in date is on or around March 28th. 566 is the convertible notes. Lacked throne. AMC has $440 million of convertible notes, just debt, that could convert to shares. Adam Aaron said in September at a event put on by Variety, I did a video on this. You can go find it a month ago. It's called The Myth of 566. He said that the convertible notes would automatically convert. That was his words at 566. I've been through those documents. There is no written provision in there that says automatic convert. It says they will convert at the option, at the choice of the bondholder. That's not automatic. And then you understand that, and you understand how bondholders think, and you understand how convertible bonds work. There's no reason financially for them to convert at 566. Because you know what happens after 566? If the stock price is going up, the bond value is going up the exact same amount. After 566, it acts just like a call option. That's why Cinemark, no one's converted. They're $10, $15 over their convert. Nobody's converted. That's just one example. I could give you dozens, but there's no point. You can go look, ask Grok, look up white papers. Watch my video. I think I put some links in there for you. It is very unusual that a convertible bond converts before maturity, if it's in the money. I'm not saying it's impossible. Maybe Adam Aaron has a secret handshake deal that they didn't document. But do you really think? Come on, the document's the document. You're gonna go on social media and tell me, Tony, you're not smarter than Adam Aaron. He's got a secret handshake deal. Okay, you wanna bet your investment on a secret handshake deal? You keep on putting that talking point out, and we will see. We will see when it gets to 566 what happens. Or 7 or 10, nothing's going to happen. That's my bet. And it doesn't matter, though. It doesn't matter. Like, who the fuck cares? The dumbest argument ever. Doesn't matter. AMC Kingdom says, I want a mental monetary compensation. I feel you, brother. Ape Rage Game says, so at this point, we are fully expecting AMC to go bankrupt. Who's we? Why would you think that? Are you listening to the same box office projections that we're hearing from Sean Gamble, Rich Gelfond, Adam Aaron? Q1's gonna suck. Ape Rage. There's no, when I look in a company's filings, what I look for, and any CPA is going to look for, is a disclosure they're required to put in there about if they have an ongoing concern risk. So I want you to go look. Do they have a going concern risk disclosure? That is their legal obligation to tell you if they think they have a risk of going bankrupt in the next 12 months, they must disclose it. And a lot of the crap y'all invest in, that disclosure is there, and then y'all get mad at me for pointing it out. And then these companies go bankrupt and you act surprised. But that disclosure is not there for AMC. So all I can tell you is there is no going concern disclosure. Therefore, the company executives and the auditors do not see a bankruptcy risk, and the bond market doesn't either. How do I know that? Because the bonds aren't trading at 30 cents on the dollar. Like, step out of the popcorn project fucked up bubble and look at objective evidence. What's the bond prices look like? Fantastic. Bond market prices is your canary in the coal mine. If those were going into the toilet, you got bankruptcy risk, no matter what anybody says. They're not. There's no going concern disclosure. And box office is forecast to get better. Are they out of the woods? No. Is it certain bankruptcy, like you're trying to say in the comments? I'd have a hard time making that case, and I'd love to see someone try, other than just wailing their arms and saying they're going bankrupt. They're going bankrupt. Where's your objective evidence? That being said, a couple things still concern me. There's going to be, in my opinion, cash burn in Q1, but they just increased cash unexpectedly in Q4. And then the other thing that concerns me is they're out of shares. They have no more ability to sell common. They have ways around that, as I just talked about. They could ask for a vote. They could issue preferred. They could go take on more debt, which I don't want to see them do. But they're not out of options. So to conclude today that bankruptcy is inevitable, I don't know. I'd say, man, that's a hard sell. I mean, there's risk, yeah. But foregone conclusion, that seems like an emotional jump to conclusion because somebody wants that to happen. They're really mad at the company. They're mad at A. They got a lot of tricks they could still pull out of their pockets. The biggest thing that could torpedo us would be that lawsuit. If that don't go the right way, you're going to have no warning. That's the problem. I think it's very low risk, very, very low risk that it's not settled. But if that 1% chance goes against the company, immediate acceleration of all debt. That's like 10 torpedoes hitting us broadside at the same time. We're cooked. So I'm not trying to scare you. I think you should pay attention just in case. So, unfortunately, like even me, I can't quantify the risk. It seems small, but if it happens, it's bad. Noah, go watch my video from a week ago about the lender lawsuit. Again, small risk in my opinion, but were that risk to be realized, really bad results. I'm not trying to scare people, but I do think you should be aware of it. Maybe if you're really risk averse, you have some hedging in place. Or as an example, I don't want to sell. I'm not telling you to sell. But if you had $300,000 in this play and there's a 1% chance you could lose it all waking up one morning because of a court decision, would you potentially hedge your $300,000? Maybe. So that's why I'm bringing it up, because I don't want to take a 1% chance for you that you wake up one day and there's a court decision, because we're not going to know till we know. There's no way to predict it. I think there's an obligation for me to at least tell you that risk is there, and you go quantify it for yourself. I can't quantify it. He did not mention retail ownership, Phoenix. Try and stay positive, Puff Bear. I think we're going to finish tonight, Puff Bear, by going to a movie. My wife is off work today. She's been waiting for me to get this live stream done. There's a couple movies that I want to go see. And really, honestly, guys, I don't own the stock right now, but I'm still going to a couple movies a week, buying concessions, buying fucking $35 candles from AMC. I think you should remain positive and support the company. And if you don't support the company, then sell your stock. If you don't like Adam Aron, get out of the play. Put it with a CEO you trust. No one's going to hate you. Don't sit here and wake up angry every day because you don't trust them. There's 9,000 other stocks you can invest in. Wake up every day happy, guys. There's no reason to wake up angry every day. If you're angry, that's probably telling you to do something. So do it. My decision for right now is step away for a couple weeks, couple months until I see what happens. I got a lot of answers today, but I didn't get all of them. So I need to wait, see how Q1 looks. Maybe I got to wait a couple more weeks. I can't, AMC Kingdom, he says, nothing to worry about the lawsuit. You know, for me, not saying for you, because all of y'all, one thing we clearly learned over the last 2 years is everybody has different risk tolerance. I'm not going to spend a lot of time worrying about the, because I'm not going to have $300,000 in the, first of all. But second of all, I think my guess is it will be settled. So, but I can't go on camera, and no one on social media should be going out there and telling people, oh, it's definitely going to make them go bankrupt. It's definite, or it's definitely going to be settled. It's definitely going, there's no definites on something like this. This is a contract dispute. And I think both sides have a good argument. Unless you're an attorney, then I want you to DM me, and then let's have a chat. Nothing to worry about? I don't know. But am I going to worry? Not a whole lot. Jack Wolf, how you doing, buddy? All right, ladies and gents. Fun hanging out with you guys. Thank you. I'll get a summary video out. You know, if we go to a movie tonight, I will do my video in the morning. I need several hours to read all through the 10K and make sure I find the exact numbers to explain to myself how we got positive free cash flow. And then we'll get, you know, either tonight or more likely tomorrow, I'll get the recap video out. I would also encourage you to watch my recap videos on IMAX and Cinemark, because I think it's good for you guys to understand how the other guys are doing and why. I still see people, why is Cinemark doing so well? I heard someone say today, I don't understand why AMC's not at Cinemark's price. Well, duh. Because you're a popcorn project dude, and you, by definition, never look at the financials. That's why. And you don't know how to do a share price valuation. That's why you think AMC should be trading at $23. Instead of coming here to learn every day, you're over there with the complainers and the conspiracy people, worried about things that don't matter, instead of trying to learn finance, valuation, accounting. Y'all don't want to learn. You just wake up every day and complain, you popcorn project people. I'm happy to teach anybody, anytime. I was looking back to my videos from late 2022 today. I've been talking to you guys. You realize this? I've been talking to you since August of 2022 about cash burn and dilution and how devastating that could be. I lost track how many times I warned people about it since late 2020. But I'm the bad guy to blame for everything that happened. So you guys weren't listening if you're mad at me. You made up your own narrative about what I said. I went in and put bookmarks for all of you in my video. Chapters. Go watch them. Thank you, guys. We love you. I'm looking for a good buy-in point here. I got one last thing I'm worried about. The Q1 cash burn. Maybe I'll get an answer after I look through Q4. So I'll have some more thoughts on that for you in the next day or so. Peace, love. Be good to one another. Bless you if you're in crypto.